What is going on, everybody? It is Ahmed, and I am back today with yet another video for you all. And today, folks, we're going to be talking about the Bitcoin halving and how Bitcoin is getting ready to basically self-destruct in the next 59 days. Now, remember, as always, I like to preface by saying that I'm not a financial advisor, just putting you guys on the plays that I am in. If you're new around here, consider smashing the like button down below and subscribing to the channel. Bitcoin 51,000, ETH 2950. Things are looking relatively good in the cryptocurrency market. Solana down about 7% on the week, kind of finding as an opportunity window right around $100. Things are looking great for the major cryptocurrencies, the macro cap, if you will, and even some of the memes. Shiba Inu down about 2.7%, still sitting at a $5.6 billion valuation. It's cool to see this. It's cool to see the market rally after, of course, ETF news and the anticipatory Bitcoin halving. Two things that I'm going to discuss in this video, both the halving and Nvidia stock. Nvidia is something that is actually very, very relevant to what's happening, especially that they beat their quarter 4 earnings. And we saw this huge jump in price action from 674 on the 21st of February, all the way up to $788 today, $22.19 billion. 22.19 billion Q4 earnings, exceeding expectations and beating their earning. That's a big milestone even for Bitcoin, and we'll explain why. Bitcoin having relevance challenged by ETFs. This is where things get quite interesting. This was published on cryptonews.net. It's a compilation of different crypto news sources that I personally like to use on a day-to-day basis. Let's go ahead and dive in. For every 4 years, the Bitcoin halving occurs, meaning the amount of new coins issued through mining rewards is cut in half, building up its scarcity. When Bitcoin first launched, mining rewards were 50 BTC. Currently, that figure is at 6.25 BTC, and after the next halving, which is in 59 days, it will be reduced to 3.125 Bitcoin. The halving occurs every 210,000 blocks rather than on a pre-specified date. But this corresponds to a roughly 4-year cycle, which means that the next reduction in issuance should reach us this April. Notably, a glance at Bitcoin's price action since inception reveals a repeating pattern of vertical gains, deep corrections, and drawn-out recoveries, and the sequence appears to correspond closely with each and every halving that has happened in the past, leading among Bitcoin traders to an entrenched belief in halving-driven movements. However, as Bitcoin has matured and grown in market capitalization, and with the introduction now of spot Bitcoin ETFs in the US, some are questioning whether the halving event is still relevant. While you can also find a few voices asserting that the halving was in fact never as important as assumed, arguing instead that other, less obvious factors have fueled price movements up to now. Bitcoin ETFs finally just approved for tomorrow. This was January 10th. You guys remember, we have BlackRock, Fidelity, Valkyrie, so many others approved and currently trading billions of dollars. I think today, inflows and total volume broke over $50 billion in a single day of trading with the Bitcoin spot ETFs here in the US. Let that sink in. $50 billion US dollars through single exchange traded funds from BlackRock and a few others. So not single, but multiple ETFs. Insane amount of liquidity coming into the market for the first time through institutional buy-ins and many, many more. The case against having importance. You could read through this and consider it how you want to, right? It says here, Bitcoin's market cap is larger now than in the early days of the asset's existence, currently sitting at just above 1 trillion in terms of its market capitalization, which is approaching the November 2021 all-time high to over 1.2 trillion. This still puts Bitcoin a long way off gold, for which it is touted as a digital replacement, which has a market cap of 13.6 trillion. So meaning we could see somewhere between an 11x gain for Bitcoin, $550,000 to $600,000 BTC. But nonetheless, BTC is weightier asset than it once was, which corresponds to reduced volatility. So here's why I think the halving is going to be exceptional, and it's going to be the determinant of how things are going to move moving forward. This is what I want to highlight in this video. Most arguments for the importance of the halving come down to straightforward matters of supply and demand, which aren't eclipsed by the arrival of spot ETFs. In fact, this view takes into account ETFs. Last week, ETF inflows were eating up an average of 9,000 Bitcoin per day, while new coin issuance were around 900 BTC a day, 10x of what is currently being mined and delivered, an amount which, after halving, will be reduced to 450. So halving literally what is currently being produced on a day-to-day basis now. That means ETFs ETFs as things stand pre-halving are taking in around 10 times more Bitcoin than is being newly issued. And so on the surface of it, cutting issuance in half looks significant, but there's also another less quantifiable factor at work, which is trading psychology along with the influence of popular narratives and shared beliefs. Look at any visualizations of long-term Bitcoin projections and circulate online, running from the launch of it in 2009 to the current moment, and then out into the next decade, and the halvings feature prominently. In fact, they are often central columns from which emanate blow-off tops and crypto winter's troughs, and what's more, BTC's repeating price swings appear remarkably well offered. We've seen them time and time again. From the guy Rover. I'm going to go over to his profile for a moment. Crypto Rover, right here. He posted this image, which was incredibly remarkable in my opinion, that showed Bitcoin's price action time and time again. I guess the guy tweets a lot, so it might be hard to kind of find it. But regardless, I'll get to the point and start narrating what it is that he posted, because I think, again, it is extremely relevant. The image was of Bitcoin's price action after every single cycle that has ever been seen. Not halvings, but cryptocurrency cycles. And the reason that it's relevant, man, this guy does tweet a lot. Holy. But anywho, the reason that it's relevant is because we see it time and time again. Between every cycle, we enter a bear cycle, we enter a bull cycle, we break all-time high, and we usually exceed that by multiples. Here's the image. It took me a while to find. In 2012, this was the chart for BTC. Notice the scale, obviously much different, from right around pennies on the dollar, all the way up to, had a really nice run up to about $30, retraced, and then blew past $120, 100x multipliers. In 2016, same thing, a nice run up, retracement, and then a parabolic run up to over 19,000. 2020, DeFi summer, leading into the crypto bull run that we mostly all witnessed from 4,000 all the way up to 69,000. And now we are currently here. A run up, 60,000. Retracement down to 20. A third of its previous all-time high. And now approaching its all-time high. Now we're currently somewhere around that $50,000 mark here. Where are we going? Will Bitcoin hit that $500,000 price target that Cathie Wood and many others have for it? I think it's very much a possibility. So buckle in and strap up. It's time to really pay attention to the market. The halving is relevant. Nvidia. The reason that I think this is extremely important is think about how much GPUs are going out right now for cryptocurrency mining. The miners are literally trying to do their very best to mine as much as possible pre-halving. And I think, again, with how February earnings reports have been coming out, strong tech earnings is huge for crypto. Nvidia beating earnings. Microsoft beating earnings. We're continuously going to see a few more weeks of Q4 earnings. The more of the big tech companies are breaking and beating earnings, the better it is for Bitcoin because it does follow tech. But specifically for Nvidia, the fact that they are the mass producers of the GPUs, the graphics cards that are currently being utilized for mining, that is extremely bullish in my opinion. So be prepared, not surprised, buckle in. I think it's going to be a bumpy ride on the way up, but it's going to be a very fun one on the way up. $100,000 Bitcoin by summer, 500K in the next 24 to 36 months. We'll see if I'm right. Could be wrong. Appreciate your support. And until next time, keep investing. Peace.